Good morning. We are going to cover a very special series in options weekly expiration using high beta dollar price range stock called Apple Computer. The reason why we use Apple Computer is because number one, we have the high volume. It's 15 million. So the part that we're going to cover is that 595 330 2012 weekly call. Part of the greatest part of the service that we're introducing to the public is where do I get the wholesale prices? You see, these are weeklies. These are not monthlies, MMTs. And so how does a stock trend relative to a call 595 or a 610 put trading it outright? So when they're marking the name down to support level, the calls lose value to wholesale entries. That is exactly what happens. One of the things that I would like to feature here, when you trade weekly options, their pricing has been, well, I shouldn't use that word. Let's say they take away the price premium from the public. And when price premiums, like on the 595 call, there are 7,400 contracts traded. Now, let's take a look on Friday's high was 13.20, but look at our wholesale area, $8.17. That's $5 range difference on that entry. Now, let's take a look here on the SMF MMT platform, what Apple has done. And we want to go back over here to this particular bar on 3/15 of year 2012 right here. And one of the things that we want to show people clearly when it comes to trading weeklies is weeklies are exactly what they are. They're going to have Monday through Friday's price range that will start on 3/26/2012. Now, the high alert option service is based on market maker wholesale entries. When I'm buying 30 contracts and I save $5, my wholesale entry is $15,000 wholesale. Now, because I'm a master at taking this instrument right here, the equity side, Apple, and then I also have a 610 put over here that we're going to talk about as well. But we're going to talk about the weekly price structures and how the weekly price structures can start out on a Monday, but boy, oh boy, by the time you get to Friday, the prices that you see right here in the 595 call, just like we traded this expiration that was on this last Friday. Now, today's date is 3/25/2012, 8:31 a.m. Pacific Standard Time. Once again, the alert service, the introductory to it is that we let people come and join us for an opening bell. And why do we do that? Because it's our way of showing you that we steal these wholesale bids based on high frequency computing machines in the ECN scripts and the equities. Now, one of the things you're going to learn clearly moving forward is why they take the premium out of the 610 put. Now, it was $18.30. They've got some trading on it. The high was $18.30 and the low is $13.95. That price range, 4.35. So, picture it this way. Each market has a wholesale price. The prices that you see here and where the low was is that people get caught up here at the $18 mark or $17.50. Then they're in them at $16.80. But then look at the low of where the high frequency SMF MMT option alert. That's taking that risk out. Dollar risk to the entry. One of the things that the MMT is taught, they do that daily. Now, the high alert service is going to be a live service with live market hours included. Why is the service as valuable as it is because of the wholesale prices that we get tell the truth compared to where your public prices are up here at 1320, and why are we always getting hit down at the lows, and how come we can put these markets out? These markets belong to us, and in pre-market we know exactly where to put things at, and we know where that lower end is going to be, both on the call side of the market and also what the put side would be. And it's always going to come back in the directional price movements of Apple Inc. This is the one here in its trends, and a lot of people use the word trends. Look, there are market maker trading ranges. It was a $7.40 range on the name Friday with 15 million shares and negative money flow of 324 million. And look at the high, and they sold it down. Now, we have been doing a complete series with live entries, and we have a complete series with MMT during live market hours, is when we were taking you through when they make exhaustion highs, this is where the volatility starts in a high frequency manner. And you can see that on 315, we were shorting these tops up here because we were. And as soon as it hit right above that 600, bam, you went down to 578. That was $21.46 short sell reversal. Big money. But look at part of what we've told you in these high frequency daily models is where they come right to our trend line. Exactly. And then you bounce, and then you make higher highs because they bounce them electronically in a high frequency model to the right side, and you're above that half daily bar. But the point of it is that you got price exhaustion here as you were gapping up, but each high at the time would have to have a pullback, and we would see this volatility. Now, to give you an example of what we went through, again, MMT was the high on 315 was 600.1, and the low was 578.55. We were getting live orders down there, and we have them live recorded with the live market hours. So based on when this came all the way down, that meant that the call value right here, the 595 call value, had to lose all the premium. That would make it wholesale. And just to show you, like on a 3-minute chart, they would take all the premium out of the contract. We would get so when they reverse the stock down to these lower support levels, they take all your premium out. And we know exactly where those wholesale bids are going to be, because that means that the 610 put is running. And when it's breaking out in price, the values are going to come wholesale to me here. And these are going to peak to the retail side of the market and to the public over here on the 610 put. The thing about it is, once you do get the reversal in the equity, you can see the depth of the intraday movement, which will also support that lower wholesale entry. So let's say earlier in the day, these hit a low, but they bounced up to the highs. And from the highs, back down to the lows, and they close at $9. And this is an Apple 330 weekly 395 call example that the alert service is going to get these wholesale bids, because let me tell you what happens is that when people were buying and owning the calls up here at the highs, they're riding them down. They don't apply stop management. No, they don't have market maker wholesale skills. They buy the upper end of the price ranges before the market makers mark them down in price. And you have to have a trend that supports that markdown. When the markdown is happening, though, they take more premium away. And that's why you never get the wholesale bottom entry levels. Not only that, when you are buying down here, you're wondering, oh my gosh, it's down there at the low, it's down $3. Oh, I don't want to buy that. No, look, wholesale is wholesale. You buy them back and we sell them to the public. That live market Option Alert Service. It's live during market hours. Is going to be worth everything. And this is just our first example on our new website, forward looking, that is coming, is that we're going to have many services. But the 610 put over here, on the other hand, when this stock breaks out from that bottom right up to that top intraday, that meant that those puts had a high of 1830 and they dropped to 1395, and that was based on that breakout. Now, a lot of people were probably getting short the 610 put, even though it's a weekly. The weekly, they're going to take more premium down in both sides. So Monday, when you get to Wednesday, they're even going to take more premium down. That's why the market maker alert service is good at the wholesale entry and selling back to the public at a higher price. At a higher price. So therefore, we want you to understand that that high frequency model that happens in the option pit, just as it does in the equity, high frequency computing cycle machines that run prices up and run prices down. The public has not been nearly as educated. And so if you are not taking out the dollar cost capital risk, you can get hurt very quickly and badly. And a lot of you know exactly what I'm talking about. And so that high frequency wholesale bid to both sides of a call market and a put market using high beta stocks within the actual live market alert service with those lower bids are going to be the premium service that we offer for higher frequency volume traders. So if I'm buying 100 contracts and I buy them $4 below the market, I save 40 grand on my entry and I sell them back for $2, my same 100 contracts, I just made 20 grand. Those are high frequency type option players that would want this monthly live market service because it will pay for itself. And you'll be able to find out more about that. Once again, it's going to come down to the talent of getting the wholesale bid on both sides of the market. So based on trends and whatnot, you kind of players don't need to understand that part of it. The part that you need to know is, how do I get this call here on 100 contracts it closes at $9? How do I get this at $3.70 on 100 contracts and sell them back for $5.70 for $3 profit off of the bottom for a $30,000 trade intraday? That's what it's about. It's about getting that wholesale bid and versus that retail print. And it means the call and the put. And we will be doing a special series, and that's based on what the equity does. This is the equity platform right here. Now, I will be happy to also show you the call side of what they did. Here is the call chart that the public doesn't like to look at. Look at, they were $16 a contract. They got marked down to $8. So I'm buying down here at $8.50 and I'm selling back $4 profit. I'm doing pretty good. This is what a weekly call chart looks like. That's that 595 call. Now, on the other hand, let's take a look at the put side. The put side right here on the weekly $600 put hits a bottom here, as it does. It hits a low of 850, and then it gets marked up. You can see where that low was, but you can see where the high was right here. And you can see in the weekly structure over here that this $13.33 and the low was 850, and then we got back down here to 870, but notice that the highs were lower because they were taking premium away. And this is why you got to be wholesale. So if I'm buying at 870 again, and I'm selling, the close is 1040, but there's a time to understand how to use that weekly based in that 5-day time series on an intraday level buying at various wholesale markets. That's just what the put side looks like, but you can see the movements. Now, MMTs for the new option alert service, we would go to the call, which here I'm going to demonstrate a weekly, it's a weekly 590, and I'm going to demonstrate how they take the premium out. But how do you take it? So let's take the high of $19. This was a 590 call that a lot of people owned on a weekly level. There was that day 3,000 contracts traded. Now, MMTs and the new people that will want to be involved in this option alert service, live intraday market option alert service is going to be worth it. It's better than you paying for a high frequency machine $8,000 a month and a server. What good's that going to do you? That's not going to get you the wholesale price. So for everyone alike, it's this wholesale prices. These retail weekly prices start at the high of 1945, but look at how they got over here now on Friday, down here to 10.85. But let's take a look at how they opened. Now they close at 12.10. They open at 15.50. There's a markup to the high, 16.65. You had to be belling. Why? Because, once again, what our option alert service does, and the pricing authority wholesale control systems that we have built, is we get that lower end of that risk out of there by getting that dollar copy. So when we're buying down here at $11, we're taking out risk on that. We know that that's the wholesale market, and we give these orders out before the market even opens up. And then throughout the day, live orders are readjusted to the lower wholesale entry for the higher frequency volume entries and exits immediately. So one of the things that we do is we measure why the service is valuable. Look it. You're welcome to join us in the morning, and we will give the bids out in pre-market before the market opens as to where the wholesale alerts are going to be. You can watch them live. You know that they're true. You know they're valid, and they were done before the market opened and before the fact. And that's always going to be, because MMTs are taught how to be market makers in these, but the people that aren't in that program, we've decided to give this option alert service live market hours before the fact, not something that comes into your email, and by the time you read it, the move has already gone by and $7,500 profits have passed you by. No, this is going to be live. There's going to be a charge for it monthly. Now, we are going to use this weekly right here to be the series and the follows up. This is the introductory here on a Sunday. Markets open tomorrow at 3/26/2012 in the morning. We'll be here doing this trade and how high frequency option computing models work along with the equity side and the equity directional movement. One thing I will tell you that you can see here, it's a standard chart. You've had a 3-day reversal. We use our own platforms. So we can tell you that these prices are going to change to various wholesale level and retail exit levels, both the 595 call, weekly 330, and the 610 put. This video is done live right now today with MMTs on their Sunday training session. However, we did want to take the time to introduce this first round and first introductory. I apologize if it's long. However, it's well worth your attention to get involved, and it's well worth your attention to get involved with this during the live market hours so that you can say, I have fairly seen it and I believe it. Because of that, we'll see you in the future.